Hey, what's going on, investing fam? I'm Stock Market Jay, and I'm here to say today, bring you some news you can really use. All right, guys. So today I wanted to talk about sector rotation and what it means and what it does and how it's really just moving and transferring money from one place to another. So there are 11 sectors in the stock market. Okay, I'm not gonna name them all. Just you can Google it, right? So sector rotation is the movement of money invested in stocks from one industry to another as investors and traders anticipate the next stage of the economic cycle. All right, and understand the economy moves in reasonably predictable cycles. So just depending on what's happening, like whether it's a high inflationary environment, right? Higher inflation means that people will move their money. They might jump out of consumer discretionary because discretionary is is discretionary spending, right? It's the consumer's discretionary dollar. They might rotate it. Investors might rotate that money into consumer staples because these are like the things that you need to live with every day, like your toiletries, like your energy, your gas, and things like that, right? Things that you must have in order to sustain everyday life, groceries, food, and what have you, right? Healthcare, things like that. During lower inflationary times or zero interest rate times, people might rotate into those discretionaries, the hospitality, those streaming services, different things of that nature that are things that electronics and things that you don't necessarily need but you want to work with, right? During high interest rate environments, people will probably take money out of financials, take money out of real estate, take money out of some other cyclical sectors of the markets that are tied to interest rates, right? In order to put their money somewhere that is more friendly during the high interest rate environment. During the low interest rate environment, people will rotate their money back into those sectors of the stock market. This is just to understand. This is just to give you a understanding of where the money flows. In the stock market, you want to follow the money. You want to be ahead. Okay, you want to be ahead, but you want to also follow the money, right? So the money is gonna change hands. The money is gonna go from one place to the next. It's gonna and you will see this. Oftentimes, you'll have like six sectors that are up in a bull market and the other five are down in a bear market, or vice versa. And you have to understand this is just the natural ebbs and flows of the market, right? This is the natural ebbs and flows, the ups and downs, the highs and the lows of the stock market, right? And this is due to the economy because you got to think about it. A lot of investors are investing from hedge funds or other firms, and even people are like individual retail investors like this as well. They don't want to lose money, right? They don't because they're managing other people's money, or even the people that don't want to take a loss essentially on their portfolio. Not understanding you don't lose when the stock goes down, you lose when you close the position. So when the stock goes down in price, that's a good time to average down. It's a good time to add more shares at a discount, which will in turn increase your profits along the way as well. You're adding more shares at a lower price, and you got multiple price points that you're going to be getting profits on. But some people don't want. They want to take those profits and rotate that money from a stock that is declining, from a sector of the market that is declining, to a sector of the market that is going to be increasing. And that's okay. That's a good way to ensure that you're always essentially profitable. It might not get you the most profits. The most profits come from investing in the long term, not moving in and out of positions. But it is a way to make sure you protect your principal, lock in those profits, and make sure that you see constant gains. All right, investing family, peace.